Hi, today is, this is A-Rod with OGEconomics.com. Today is March 13th, 2023, and I wanted to just give some comments in regards to what's going on. I'm sure most of you have probably heard that there was a bank bailout that occurred this weekend. It started a few weeks back with a bank called Silicon Valley Bank, SVB. And I want to try to explain in simplistic terms kind of what happened here and what that led to. And let me just adjust my video here just a bit. So SVB, Silicon Valley Bank, has been in business for about 40 years now. And when COVID happened and stimulus was paid out by the government, and we had the PPP loans for businesses to keep their employees retained, a lot of money was paid out to individuals and people, or excuse me, businesses, as you know. And that money got deposited into all the banks, but specifically let's talk about SVB. So SVB received a bunch of cash coming in that they had to do something with. So what they did was they thought they were trying to play it safe by buying government bonds. And this was back at the time, back in 2020, 2021 timeframe. Interest rates were close to zero. The 30-year bond, I'm kind of little drawing a blank here on the rate, but let's just say as an example, they were 1.5%. So what they did was SVB went and bought government bonds at, let's say, 1.5%. Well, the way bonds work is that if you buy a bond at 1.5% and interest rates go up to, let's say, 3%, if you put $1,000 into a bond at 1.5% and rates go to 3%, then that $1,000 bond that you paid for may only be worth $700, because as interest rates rise, the value of your bond goes down. Now, that's exactly what had happened with the bonds that SVB Bank purchased. Now, everything was fine. You didn't hear any problems. There was no need for a bank bailout. So what happened? Somewhere along the way in the last couple weeks, some of those investors, or just regular people that had money at SVB, they started wanting to withdraw their money. And it got to a point where so many people were withdrawing money. The only way SVB Bank or SVB could continue to pay those investors their money is they had to go sell those bonds that they owned. Now, remember, if a bond goes from 1.5% to 3%, the value of that bond goes down. Okay, again, example of you bought it for 1,000, interest rates go up to 3 from 1.5, and now it's worth probably $500 maybe. So SVB Bank went ahead and sold their bonds at a loss, a huge loss, to raise money to pay out to the investors asking for their money back. And I want to say the figure was like $1.6 billion, but it was enough that the bank felt like they needed to go out and raise money in order to kind of get that, what they considered to be a buffer again. And as soon as the public found out that the bank needed to raise money, then all the other investors started asking for their money from SVB. and that created what's called a run on the bank. Everyone's going in there, wire transferring money out of the bank, and it got to a point where SVB no longer had the cash to be able to pay out to investors. So what ended up happening is the FDIC got involved, Federal Deposit Insurance Corporation. They're the ones that insure money at the bank. And the regulator in California had to step in and take over SVB Bank. And so here's a couple situations that have come up that led to a bank bailout. So first of all, FDIC will insure your money up to $250,000 at a bank. Now, it's come out that at SVB, over 90% of their customers had more than $250,000 in the bank. So what that means is that if FDIC only guarantees you your first $250,000 at the bank, then if you have $500,000, let's say, you're only going to be able to get $250,000 if the bank goes bust, because that's what FDIC guarantees you. The other $250,000 that you had at the bank is gone. So the reason the FDIC had to get involved is because when 90% of the customers had more than $250,000 in their account, then there were going to be an awful lot of people and an awful lot of companies that were going to be losing an awful lot of money that was used for payroll and there were new startups and things like that. So obviously that would have affected the economy going forward even more, because now you've got several businesses that would have to shut down. And so what ended up happening is we saw over the weekend, there was a lot of speculation about whether the banks were going to get bailed out or SVB Bank was going to get bailed out, talking about how bad the situation could get Monday morning when the stock market opened. And so on Sunday, there was an announcement by the Treasury, Federal Reserve, the Biden administration, FDIC, that they are now guaranteeing an unlimited amount of money in the bank. So, in other words, for a company that maybe had $1 million at SVB, that first $250,000 was guaranteed by FDIC. The other $750,000 was going to be lost, potentially. Now, with the government stepping in and guaranteeing all deposits, they're trying to prevent a huge loss of jobs. They're trying to prevent a huge loss of confidence in people. They're trying to prevent this spreading to other banks. Now, also on, I believe it was Friday, SVB Bank was taken over by the regulators. But then also that same day, there was a bank in, I want to say New Jersey. For some reason, I'm drawing a blank on the name, but it doesn't really matter. A second bank was taken over. Now, I've also heard that there's been one or two other banks taken over the weekend as well. But in terms of trading on Monday, the way the stock market opened is a number of these banks are down 60, 70%. And so, again, the government made an announcement on Sunday that they were guaranteeing all deposits because they're trying to prevent this run on banks from spreading. The problem is that if you go from insuring $250,000 to unlimited, all in one move, it shows investors, just shows people that the government is so panicked that they need to pull out an unlimited insurance guarantee just to try to calm people down. That's not a good situation. The last video that I did, I had said that if you did not know, we are collapsing. And I think that was about 2 weeks ago. And so again, this move by the government to guarantee all deposits, going from 250 up to unlimited in one step, one move, in my opinion, shows that there is a great amount of panic within the government. And I also think that they spent a lot of their firepower already. Because what they're saying is this money isn't coming from taxpayers. What they're saying is they're going to charge all the banks a fee as a separate account to cover the losses for this unlimited deposit money. So what they're trying to say is that it's the taxpayers, we're not paying for this. The problem is that if they're not successful in calming people down from running to a bank to take their money out, then there's going to be even bigger ramifications that are going to have to be addressed. So, in other words, what I'm getting at is this was an event that they feel or they believe that they're trying to stop spreading to other areas. And what I'm saying is, in the event they're not successful in stopping this from spreading, and if it does in fact spread, they're going to have to come up with more money somewhere. That's going to lead back to the taxpayers, which means they're going to have to go to Congress, going to have to get approval, and that's going to be very, very difficult in the environment that we're currently in. So I hope that now you understand what led to SVB basically being taken over, going bankrupt. You know, there's some question about whether or not over the long term people would have actually lost any money. And what I mean by that is, let's go back to that example of buying the government bond. So let's say that you buy a 30-year bond and you're 15 years into the bond and interest rates are rising, which means the value of your bond, your principal value, is going down. However, if your intention was to hold that bond for the entire 30 years, then anywhere in between 1 to 30 years, the value could go down. But as long as you held that bond until it matured 30 years later, you're guaranteed to get all of that principal back. So there's people talking about how SVB wasn't really bankrupt because they had these bonds, and if they just hold on to the remaining bonds that they didn't sell, then eventually they'll get their money back. And then the depositors that had over $250,000 would also get their money back. But if they just recently bought these bonds in 2020, 2021, before interest rates started rising, there's still a long time frame to have to hold those bonds in order to get paid 100%. And inflation is going to be out of control by that time anyway, even more than it already is. And the money supply, if they have to print, which they're going to have to, because at this point, there really isn't any other way to get out of this. They're going to have to print. The Fed's going to have to print. That means everything that they just told you over the last couple years is all for nothing. The Federal Reserve on Tuesday or Wednesday of last week, in a hearing in front of Congress, said that they didn't see any banking crisis on the horizon. 2 days later, 3 days later, A bank was taken over by a regulator. They don't have a good enough grasp on what's happening in the economy. Janet Yellen, our Treasury Secretary, a few years back said, "We will not see another crisis in our lifetime." So if you're depending on the administration, the Treasury, the Fed, if you're reliant on them telling you what the situation is, you're going to be not only misinformed, but you're going to be completely dumbfounded when this all continues to burn down to nothing. So I kind of went off track here a little bit, but my point is that you need to make sure that you have a grasp of what's going on. You don't need to know every single detail. You need to have a good enough overview of what's going on, because things are unraveling quickly and they're going to continue. So I hope you got some value from this. If you did, please like the video, share it as well. And I'll be coming out with a few more videos, probably another one today, and then it should be every day from here, at least for the next few days. If you have any questions, please let us know. Appreciate your time. You have a great day.